Hey everyone, Asher Benjamin here. I'm a loan officer at Nexum Mortgage, and today we're going to talk about the home buying process. Everything from getting pre-approved to those keys hitting your hand. If you're a first-time home buyer or you're looking to buy your first home, make sure you stay tuned for the whole thing so you know exactly what to expect and prevent any unwanted surprises along the way. So when it comes to the home buying process, people think that step one is go get a realtor. Go start looking at houses. Wrong. Step one, get a loan officer like myself. Well, why would we want a loan officer first? Don't we want to talk to a realtor and see what's out there? No, and I'll tell you why. If you go out, you find your perfect house, your forever home. You are in love, this is the house you want, and nothing else matters. You may be in for a surprise if you don't qualify for it. So the first step in your home buying journey is actually talking to a loan officer. My job is to talk with you, sit down, get your financials, let's look at everything, and then send you off with a realistic expectation of what you can afford and what you can qualify for. So what does that look like? Well, step two in the home buying process, every loan officer you talk to, you will need to fill out an application. On that mortgage application, you're going to be asked questions like your birthday, your legal name, your social security number, where'd you live for the last 2 years, what'd you work for the last 2 years, etc. There's a lot of information on there, and it is all required when it comes to buying a home. Once we have your application, step three is going to be now collecting documents. Your loan officer will ask you for a driver's license or a government ID, 2 months of bank statements, a month of pay stubs, tax documents, and there is a few other things depending on your specific scenario, but don't be alarmed. That is all part of it. Please do not black out any information on your bank statements or your pay stubs thinking, oh, I don't want them to know this, because there's two things you should know. One, we don't really care what's going on. We're just trying to make the deal happen for you. And two, the underwriter's going to want to know what it is that you took out, and if anything, you're going to draw more attention to it. So please just send those documents as they are, and make sure when you send them, ask your loan officer, hey, what is a secure way I can get these to you? When I ask for documents, I always give people 2 secure options to send me the documents, whichever one they're more comfortable with. It's never a bad thing that those sensitive documents you're sending over can only be seen by your loan officer and yourself. Now, once I get your documentation, I'm going to make sure that everything you told me on the application checks out with the documents you gave me. I'm going to make sure that if you told me you made $80,000 a year, that your pay stubs show that you made $80,000 a year. If you told me you got 10 grand in the bank, I'm going to make sure you have 10,000 in the bank, and I'm going to make sure there's no weird deposits going on. Because when we get to underwriting, if there are any abnormalities in your bank account, the underwriter's going to want to know. And I want to get on top of those before they even have a chance to see it. Now, let's say everything looks good. I got your application, I got your documentation. What I do next is I'll pull your credit report. Some loan officers will do this at the front. I prefer to do it at the end. And the reason is I didn't want to unnecessarily ding your credit when most of the problems that come up can be found without pulling your credit. Now, what does it mean to pull a credit report? Well, your credit report will tell us 2 big pieces of information. The first thing is it'll give us a history of how well you've managed debt, whether it's car loans, student loans, credit cards, and it will give you a score. The higher your credit score is, sometimes referred to as a FICO score, the less risky you are with managing debt. And in the eyes of the bank, that's going to result in a better rate. So the higher the score, the better the rate. The lower the score, the less capable you are of managing debt, the riskier you are, your rate might be a little bit more expensive or a little bit higher, so keep that in mind. We'll talk about loan programs and credit scores in another video, so stay tuned for that. So everything checks out. Your application looks good, the documents check out with what you told me, and there's nothing on your credit report that causes any issues. Now the next step is you receive what's called a prequalification letter or a pre-approval letter. What is a prequalification or pre-approval letter? That's your golden ticket. That tells you exactly what the limit is that you can qualify for when you go out and you look for that perfect home. Once you have that golden ticket, the next step is to get a realtor. I'm sure you have a family friend or a family member who is a realtor. If not, do not be afraid to ask your loan officer for a recommendation. Remember, we do this every day. We talk to realtors every day. We can help guide you to a realtor we know will be great for you in the area you're looking for. But once you have that realtor, you give them that little pre-qualification letter. You say, hey, I'm good for this. This is what I want. Make it happen. And then they will start working their magic. Once they find a home for you, now the negotiations begin. You, your realtor, the seller, and their realtor will now go back and forth until you guys can reach an agreed upon price. They might accept your first offer. They might go back 2 or 3 times with you until they meet somewhere in the middle of what they were hoping to get. Once that offer is accepted though, Now the real game begins. There is a lot of stuff that's going to be happening all at the same time, especially at the beginning parts of the process. So hopefully this portion of the video helps you understand a little bit more about what's actually going on behind the scenes. One of the first things that your realtor is going to do after you have your offer accepted is order a home inspection. That home inspection is just for you. It's for you to know every little, medium-sized, and large issue that is potentially with that house you're purchasing. Take note, inspectors are good at their jobs, and their job is to find every little thing. Don't be surprised if you find a thick packet of problems, but just know there's always little things that come up with houses, and more often than not, they're just minor issues. Now, if you have a large number of them, or you have a large issue, get with your realtor and see if you can't get some more money out of the seller to help cover some of the costs to repair some of those issues. Something else that's happening once escrow is opened or once your offer is accepted is that your loan officer will start the process with the lender. Well, what does that mean? At the beginning, your loan officer is going to send you a ton of documentation. Those documents are called the initial disclosures. They're sent by everyone, and there are hundreds of pages. Don't be alarmed, it's all part of the process. Just be sure to look at that loan estimate. There's a lot of documents in there, but none more important than that loan estimate. That will tell you everything going on with your loan. Tell you what rate you're at, is the loan locked, what are the fees associated, most of them estimate, but still what are the fees associated, so that way if you have any questions you can ask them right out the gate. Take note that when you sign these, you're not saying I agree to this. What you're saying is I have received this, because your receipt allows us to move on to the next step, which is submitting your documentation and your application to the underwriter. The underwriter's job is to essentially do what we did at the start. They're going to make sure that all the information on the application lines up with the documentation we gave them. This initial review process could take a day, it could take a few days. It depends on the loan officer you're using and what bank that they're going through. So if you ever want to know where you are in the process or how long it's going to take, don't be afraid to ask us. We'll let you know. But once they have a chance to review everything, they're going to come back with some questions. Those questions are referred to as conditions. So you will receive what's called a conditional approval. Hey, your loan looks good, as long as you answer these questions or you fulfill these conditions. Now, these conditions could be simple, like, hey, what was that deposit for $6,000 in your bank account? All the way to, hey, you've got child support coming out of your pay stub. I need some more information about that. So just know that when the underwriter comes back with a list of conditions, that's absolutely normal. And do not be afraid if your loan officer comes back and says, hey, we need some more documents or we need some questions answered. It's all a part of the process. If the inspection came back, everything's good there, we've got our approval. The next step of the process is typically ordering an appraisal. Now, the inspection is just for you to find out every little and or big thing that's wrong with the house, if there is anything wrong with the house. The appraisal is similar, but it is not the same. The appraisal is something done by a third party. It's not controlled by your loan officer or the bank. It's a third party that comes into the property and says, based on this data, based on the houses around it, and based on the condition of the home, this is what your house is worth. Now, if there are major issues, they will say, hey, you need to fix these. But for the most part, it's just telling the bank, hey, this house is worth what they're purchasing it for. We're good to go. There's three things that could happen on an appraisal. The first thing is you're buying a house for $350,000 and the appraisal comes back at $350,000 as is, which means you don't have to do anything. The seller doesn't have to do anything. This house, as it currently is worth $350,000. That's what we usually want, and more often than not, that's what happens. The second way an appraisal can come back is, hey, this house is worth $350,000, subject to, and they'll usually list one or more things that need to be replaced or fixed in order to be worth $350,000. What they might require you to fix could vary on what kind of loan product you're getting. But as an example, I had one come back, hey, your house is worth what you're wanting, subject to the master bathroom getting a toilet, because they did not have a toilet in the bathroom when they were purchasing it. Once the seller made that change, the appraiser went out, said, yep, you got the toilet in there. It's now worth what you're buying it for. You're good to move forward. So we have as is, subject to, and then the third way it can come back is, hey, you're buying a home for $350, it's only worth $330. It comes in undervalued. It's not an option we want to see, but it does happen from time to time. If your home doesn't appraise for the value you were hoping, there are steps to take. The first thing you should always do is talk to your loan officer and say, hey, I need a reconsideration of value done. What that means is that your loan officer will get with the realtors and say, hey, appraisal came in low. I need you guys to send me homes around the area that sold recently that justifies the price that we're trying to buy it at. And so usually they'll come up with a few more comparable properties. You'll put that in what's called a reconsideration of value form. Your loan officer will send that to the appraisal company, and hopefully your appraiser looks at it and says, you know what, you're right, it's worth $350. They could also say, the houses that I picked to compare it to were better, it's still worth $330. Or they can come back in the middle. Hey, these two houses actually support $350 a little better, but we're not all the way there, so it's actually only worth $340,000. Either way, that should be your first step. Now, what if the value remains under what you purchased it for? Once again, you've got three options. Option one, you cover the difference. As a buyer, you could say, hey, I'm buying this home for $350. The bank is only going to lend me on $330 because that's what the value came in at. So that extra $20,000, I'll come to closing with that. So that means you will be required for the down payment, your closing costs, and now the $20,000. The second option is the seller covers it. Hey, I know that the appraiser said it's worth $330. I'm okay lowering the price to $330, and then you just move forward. That has happened for me in the past with some of my buyers. However, what's more common is you meet somewhere in the middle. I'm selling the house for $350, the appraiser said it's worth $330. I'm willing to come down to $340. So now, just like in that first scenario, you're going to come to closing with the closing costs, the down payment, but instead of the $20,000 difference, because the seller met you halfway, you're only coming with a $10,000 difference. There is also a fourth option, which it comes in too low a value and you don't want it, but hopefully that's not the route we go. At some point in the process around here, you're going to receive a document called a closing disclosure. Now, just because it's called a closing disclosure doesn't mean we're necessarily ready to close yet, but this is a heavily regulated business. And one of the rules that we have to follow is that you must receive what's called a closing disclosure no later than 3 days before you intend to close. So what you'll find is a lot of lenders, a lot of banks and loan officers will send out the initial closing disclosure maybe a week or so after you get the initial set of documents. That is perfectly normal. Just know, acknowledge, sign that thing as quick as possible, and just like the loan estimate, you're not agreeing to the terms yet. All you're doing is acknowledging, hey, I have received this. And why that's important is because we still might not have all the fees dialed in. Right? That happens at the end of the process. We had all the questions that the underwriter had answered. The appraisal looks good. There's no more negotiations taking place. Now you will be officially cleared to close. What that means is your loan officer, the title agent or attorney, and the closing department at the lender or the bank will work together and say, hey, here's where we think the numbers should be. This could be with how much property tax need to be collected, what do we need to collect for insurance, for HOA, etc. But we'll work together and we'll get the final numbers done. Now, once we get those numbers all finalized, your loan officer should send you a copy of the final settlement statement. That way you can look over every single fee that's involved, what you need to bring to closing, and if you have questions, you can ask your loan officer there and not be stressed about it at the closing table to ask that question. I like to get them out, and most loan officers do get them out about a week at a time, so be on the lookout for that and ask any questions you have. Once again, our job is to help you navigate this process and alleviate any questions or concerns you might have along the way. Once you receive those numbers and everything looks good, the last step is now sitting with a title agent or an attorney or a notary and signing those final documents. This is the time where your signature means I agree to these terms. Up until this point, with the loan estimate and the closing disclosures and any subsequent closing disclosures, you're just acknowledging you received them. Now you're sitting down and saying, I agree to this. Once you've signed, now the title agency or the attorney will submit it to the county. They're going to make sure everything records with the county. Once it's recorded, they're going to let title agents know, hey, you're good to disperse, which just means the money that needs to go to all the different places goes there. And most importantly, you've got the keys in your hand. Remember, buying a home is a journey, and my job and your realtor's job is to make that journey as easy and as stress-free for you the entire process. Hopefully this video helped. Hopefully you now know what to expect when it comes to buying a home, whether it's your first home or it's been a while and you just need a little refresher. As always, if you have any questions, leave a comment, shoot me a DM, and please don't forget to subscribe and share with all your friends. And if there's any topic you want me to cover, please go ahead and leave that in the comments below, and I'll try to get through everything I can. Till next time.